Welcome to Everything Money. We're so glad you joined us today. As always, I'm your handsome host with one of my favorite shirts. They call me out on my shirts, Paul. You know these shirts? I'm loud. I love colors. I got the tattoos everywhere. I'm wild.
I don't even think that shirt's loud at all.
Oh, well, I mean, thank you so much. Today we're talking about, this is my tourist shirt, Paul, because
you look like you're ready to go to a
that's what I'm going to say. We're talking today about Carnival Cruise, CCL, LUV stock, which is Southwest, and Marriott hotels. Why? The world is opening up. Masks are coming off. Everyone's got vaccine. This stuff is going to pick up, Paul. And what's going to happen with the companies, their stocks? What's going to happen? I mean, this travel is happening. People are getting on these boats. I'm excited because you and I have owned Carnival Cruise for many months now. We think it has a lot of room to run. And these are three of the biggest and most exciting travel companies that we like to analyze right now. And not so much just from the numbers, Paul, from more of like your mindset behind these companies. Go ahead.
When we first started doing extensive YouTube videos, right during the pandemic, we only had 400 or 500 subscribers. Now we have 40,000 NBD. Anyways, we talked about CCL and LUV, and I bought CCL around $11 or $12 a share. Mo did, Seth did. I was selling puts on them, which join our Patreon. You'll learn more about selling puts to generate income. But since then, CCL has gone to $27 a share, which it's currently at. Guys, LUV, I literally bought LUV at $25.00, literally 25 in the nose. It is now at $61 a share. Now, here's what I want to explain. The world is opening up, but these companies still have very bad balance sheets and income statements due to the year of massive cash flow loss, right? They're not back to cash flow gain. They're not back to normal. I read the other day that Southwest is happy because their cash burn is down to $6 million a day.
Yet their stock price is almost all-time high?
There we go.
What's this?
This is Southwest's 10-year chart on our trusty Everything Money software. $65 in 2018 was their peak. They're currently at 61, and they hit 64, 65. Now, for those of you who say, well, that makes sense, and trust me, I've been there. I'm an avid real estate investor. I will hear real estate people say, well, hey, if I rehab one unit, it shows that I can increase value by $30,000, so I'm going to charge all $30,000 extra for all the other units. But wait, we still have to go spend more money to get there. Same thing here. Guys, why are we at all-time highs? Just because we're opening back up again? We still need to pay ourselves back for the last year of huge losses. So look at the income statement. Back when it was at all-time high, $20 billion in revenue. This last year, 5.7. And guess what, guys? This year, they're not going to do $20 billion in revenue. So you're already paying them a price that they achieved at their highest point ever with almost their highest revenue ever today. They're still burning $6 million a month in cash. How are we giving them the maximum value? So I'm not a buyer of LUV right now at this price. In fact, I sold LUV at around $50 a share because I thought it was worth between 50 and 60. I sold some covered calls on them. They got taken away from me at $47 a share. I was happy. I went from 25 to 47 in 6 or 7 months.
If you're liking the software behind Paul and you've never had access to these numbers, you find it hard to find these on Google or Yahoo. If you become one of our patrons, you get this software. It's yours. Keep going, Paul.
80 cents per day, and you get the software, exclusive access to our Discord and thousands of other members, and more videos exclusively from us, not on YouTube. So I look at this thinking to myself, okay, this is an example of hype. We're opening back up again. The world's coming back. Let's go. This is where people disconnect between the financials and the stock price. Guys, why are you paying the same price for the company that still has yet to go back to their all-time highs? Now, CCL, on the other hand, is a little bit different situation. If you look at CCL, I still think there's room left in this bone. 10-year chart. Look at this 10-year chart. We're here. All-time high is here. So just from that perspective, it makes a lot more sense, right? Just looking at the chart saying, okay, forget about the numbers. Is it reasonable to say that the company hit an all-time high of 70 or 80 bucks and now they're at 27 in the pandemic? It's way better than LUV, which is an all-time high of 65 or $66 and they're at 61 right now. That's where it makes more sense to me. You look at the financial statements, guys. Look at their financials. Way worse though. Their revenue dropped 95%, 96%.
Wow.
I still think CCL is a $40 to $50 stock. So there's still upside left in CCL for the shares. I like the fact that it's still selling for a low number. And the world started, I think I read somewhere that they're talking about September of this year being fully open on cruises. Is that true?
Mo does the morning news. Mo, what are you hearing about CCL?
They were also saying July.
July?
They could start rolling. Yeah. They're gonna have restrictions, but it'll be July.
Wow.
What kind of restrictions?
I'm assuming you have to be vaccinated.
Oh, okay.
That kind of stuff.
Vax and mask, the usual?
Probably.
But people are really anxious to go out there and travel. You know what I mean? So I think it'll be a very fast rebound, but it's still going to take time, guys. And this is not going to be an overnight thing. So another company we're looking at is Marriott. Now, Marriott has the same issue that LUV has, Southwest Airlines. This is the 10-year chart on Marriott. Guys, it literally hit its high right before the pandemic. It crashed, and now it's back up pretty close to its high. I'm sorry. I just don't buy it. How do you go? It's still, look at this revenue. Its revenue drop was not as significant as most said earlier. It's still a 70% revenue drop.
Jeez Louise.
But why are we selling it almost all-time highs again? I just don't get that.
On February 25th of this year, they hit an all-time high.
So they hit an all-time high during the pandemic, still not reopened.
Yeah.
Let's look at their quarterly numbers. Let's see where their quarters come in at. So this first quarter this year, they did $536 million. So they hit an all-time high their first quarter, and that quarter did $536 million. In the 19 quarter, they did $1.3 billion. So still 60-70% drop in revenue, and they hit an all-time high. Guys, this should be an eye-opener for everybody watching this. This is why you look at the financials. Why would 2 out of 3 companies we're looking at, Southwest Airlines and Marriott, be at all-time highs when revenue is still down 60, 70, 80%? Let them get out of it. Let them weed it out. Let them get through the mess and then go, okay, is this a reasonable company to buy? The hype's already gotten out of it. The hype was here. The way you should have bought it was right here. You should have been buying right here, but nobody wanted to buy stocks right here. That's why it was so low. Because this is where the uncertainty was. What's going to happen in the world? It's $60 a share. I don't think that's low enough, to be honest with you. But now it's at 140. Come on. Let's go to Trader Mo.
Mo does trading, exact difference. Instead of long-term investing, it's trading. Mo, you have a Bid and Ask Nation, our middle Patreon tier. Many people jump from our lower Patreon to this one where they start trading. You go over the wins per week where people are making money, like 10, 15%. You want a slow burn of like people getting great, slow, nice returns. But this week we're seeing some huge returns. So talk about some of these companies about trading this, whether it's 15 minutes, multi-week. Go ahead, my friend.
Okay, so we're going to do long-term stuff on all of these. So this is Southwest. It has an all-time high as its resistance point for sure, and that's where it's sitting right now. And you can see it just made a great climb and just went sideways for a very long time. As the stochastic went sideways, the price kept increasing, which is great. Now we're looking at it going short. We've broken through the 80% line, and we have a downtrend on our stochastic. Now, let me erase this and just show you what I'm seeing on Southwest. So if you just draw this line across for the last 6 months, it's just kind of sitting in that range, just bouncing around, not doing much. So that tells me that there is a very strong support level right here and a very strong resistance level right here. At some point, volume is going to have to come into the stock, whether it's people going short on it or going long on it. That's going to have to push it in one direction or the other. So what I could see right now is if we get an engulfing candlestick coming down, then you can go ahead and go short on it. But you have to break through that level right there. So that's it for Southwest. You want me to go to CCL? That's my favorite one to show. Yeah. This is my favorite one to show because I can show you guys this 50% rule that is so powerful.
What is the 50% rule?
So the 50% rule is when you have your previous all-time high and then it drops like it did during the pandemic and there's that low, and now there's this range right here over top that is called overhang, and it's just putting negative pressure on the stock. So every time the stock price climbs up, people get to a certain point and they say, I need to exit, I want to take my profits, it's probably not going to go higher. Volume drops, goes back down. Again, you can see how many times it crept up and then fell back down. So it's at that level. It just cannot break through this, call it $30 level, just because of all this overhang. At some point, I don't know what it's going to be. It's probably going to be like real, when they actually start making real money, people returning to ships, this and that. That's when you're going to get true volume that's going to push this thing back to maybe its all-time highs. I don't really know, but $40 to $50 a share, something in that regard. So this is something that I love to show with CCL because of this overhang. This is why this thing cannot break through, coupled with everything that's making money and whatnot.
If these charts speak to you, Mo and I did a training session called the Employed Trader, where for just maybe, Mo, an hour a week, an hour a month.
Probably an hour a week at most, but I don't even think that. The goal for the Employed Trader is for you to spend 5 minutes a day, if you want to, 10 minutes a week.
Yeah.
Looking at your chart.
You'd be following Mo, you'd be getting on a Discord team, and trading and doing something, just get your return per year just a couple percentage points up, so it can drastically change your long-term plan. So, Paul, final take on these travel companies and what's going on moving forward.
Things have been getting better. They obviously are getting better, but don't overpay for what has yet to happen. That's a very important aspect of fundamental investing. Don't pay for the future. Don't pay too much for the future today, because a dollar tomorrow is not guaranteed. A dollar today is more guaranteed than a dollar tomorrow. There's some sort of discount to it. But when we have 2 of these 3 stocks selling pretty much at all-time highs, even though free cash flow is still burning, revenue is not back up and down significantly still, you just got to pump the brakes, realize there are other opportunities out there for companies with actual stable free cash flow that you can buy and invest in for the future. I do love Southwest as a company in terms of I've always been a fan of them. And when they do open back up again, I will definitely be looking at them as a long-term play. But in the meantime, I just think it's too rich for where they stand right now economically.
You and I, we've made 70% on CCL since we bought last fall. I mean, this seems it's got so much.
No, more than that.
Oh, really? That's
I'm buying $11 or $12 a share, so it's at 27 right now.
I see. Of course.
What'd
Holy cow.
I bought at 13.
Oh, great. Tim even bought it.
And currently I have puts from $19 all the way down to $2.50.
Oh, so I exited my 250 puts.
I did not.
You didn't? Because we got like 90% of the gain very quickly.
I'm also looking at it as the amount of cash that I'm going to get for waiting that extra 5 or 10% is a lot. And what am I going to do with the cash right now?
I thought it was like hundreds of dollars. I was like, I'm out.
It just seems like it's got so much room to grow still. I mean, like proven growth in the past of the stock price.
And like I said, I think remember, they've diluted people a lot. They've issued a lot of shares. So I look, every single time they issue more shares, I got to take that. My original price for CCL was 60. Then they went and issued a lot more shares. I'm like, okay, we're in the 40 to 50 range in terms of share price. Fine, it's still got upside, but I think there's better value propositions out there for me. And I already have my CCL position. I'm not exiting it, and I'm not adding to it. I'm just like, okay, well, I'm fine. And as it goes further south, I will be adding to my puts on it. That way I can get it at lower shares if it happens. If it doesn't happen, I get the income and I stick with it.
That's our take on CCL, Southwest, and Marriott. We've talked about the Patreon. Click the link in the description below. Fondle the thumbs up on the way out. I hope this resonates with you, following the math of these companies. And if so, follow along. We'd love to have you. Thanks, guys. Appreciate it.